Good afternoon, everyone. Welcome to Stock Market Today. It is Wednesday, September 17th, 2025. Another volatile session for the stock market. The Fed, as expected, cut their key lending rate by 25 basis points to a range of 4 to 4.25%. Sort of an interesting reaction by the stock market. We'll talk about that in just a moment, but let me bring on our news editor, Ed Carson, who's got three stocks to watch for today.
Yeah, a couple of Dow giants, Ken, Nvidia and American Express, they diverged. And also want to look at MP Materials.
MP Materials, very good. All right, well, let me share my screen here and let's talk about this. Let's talk about this market because there's a lot to talk about. Ed, the Fed, as expected, uh, lowered interest rates by a quarter basis point. Nasdaq Composite, what was it about between? What was it? 2:10, 2:15 p.m. Eastern time. The market really fell sharply. The Nasdaq fell sharply. It was down 1.2% intraday. Let's see if I can get these charts. Oh, I'm not showing the Nasdaq chart for some reason. Nasdaq chart. Well, let me just start by talking. I may need you to take over the charts, Ed, for some reason, because I'm
All right,
entering ticker symbols
just give
here
me a
and
moment.
they are not working. Let me uh, I'll stop the share and then yeah, I'll try. Let me try one more. Should I try one more time?
I was going to try to do it myself here at this point. Let's see here. So the Nasdaq ultimately, yeah, was down 1.2% at one point and closed down only 0.3%.
That's right. And then we had the actually gains. We had gains for the Dow Jones Industrial Average and small caps. Dow Jones outperformed with a 0.6% gain. Russell 2000 also did well, up 0.4%. And then the S&P 500 closed with just a mild loss here. So okay, the Fed cut rates. It was widely expected. Ed, it didn't sound like an overly dovish news conference. The Fed chairman was talking about that uncertainty is still elevated for a lot of committee members. Still a lot of debate about what the path of rate cuts is going to look like between now and the end of the year. What was your take from the meeting?
I think some of that was just the usual caveats because they want to leave it out. Like, what if inflation picks up or the economy turns out to be stronger? That's what happened in late 2024. They cut rates and immediately there was stronger than expected data for a while. So they want to leave themselves out. And also, if they don't push back a little bit, just a little bit, then the markets will start expecting even more, and then they can disappoint even if they do cut rates. But look, it was as expected. They're going to cut times the rest of this year. It sounded like, yes, Powell said it's case by case, but probably assuming that the economic data sort of trends the way people expect it, that's likely to happen. I would say one of the factors that was weird is that the dot plot, which is where we got this indication of where future cuts are going to come, a lot of divergence. A lot of Fed policymakers only want one more cut. There was one that
Hmm.
wants like 125 basis points. So Powell, in his final months as Fed chief, is having to navigate. It's just sort of all over the place. Usually, there's more continuity on where Fed policy should go. So it's a little bit like herding cats in a way that it isn't usually so hard. But right now, the Fed policymakers aren't sure where they want to go collectively.
Yeah, I mean, uncertainty is never good for the stock market, but I think the market proved again today that there are still buyers around. Correct me if I'm wrong, but didn't Powell also say that there were six committee members that didn't feel rates should be cut anymore between now
That
and the end
might
of
be,
the
it
year?
might be. There was a lot of that were thinking that are like not many cuts at all, or there
Yeah.
was a lot of divergence there. I will say ultimately that the indexes basically closed where they were just before the 2 o'clock Eastern announcement. I mean, there was a lot
Hmm.
of back and forth, but ultimately, didn't really do a whole lot. This is sort of where we were maybe right in here, and then we closed, well, right there. And
Yeah.
that's sort of what we saw with a lot of the indexes. So ultimately, I mean, we could have a day two reaction. You never know how
Hmm.
that's going to go. But ultimately, the major indexes and the Russell 2000 are all basically at record highs. The Russell is almost at record highs now. So it's hard to get too upset about today's, little whipsaw action.
Yeah, absolutely. Again, market showed today that there are still buyers around. Again, the Nasdaq was down 1.2% on an intraday basis. Again, Powell did cite downside risks to employment and maybe some upside risks to inflation. So the market is shrugging that off for now and still acting quite strong. Let's check in on RSP. This is the equal weighted version of the S&P 500, the RSP ETF. That was up sharply, close to that 190 level. Did give back a lot of gains though.
Yeah, it was almost at a record high, briefly went below the 21-day line, and ultimately was up a little bit. So, yeah.
Hmm. And then the QQEW Nasdaq 100, kind of a similar story here. Maybe slightly a little bit stalling type action. Couldn't hold that gain, but still basing here and not far from all-time highs. Now the 10-year
And a
Treasury
pretty good
yield.
outperformance versus the NASDAQ, when you consider that
Yes,
stuff.
absolutely, yes, because the Nasdaq, yeah, was down about, yeah, nicely outperformed the Nasdaq Composite. All right, the 10-year Treasury yield, that really, well, it did reverse a little bit higher. I thought that 10-year yield after the statement went slightly below 4% for a little bit, but it did reverse higher. What's any story or any message here?
Well, I think one of the things that's going to be fascinating, not just today, but through the whole next several days, is how the Treasury yield market reacts to the rate cut. And what happened when the Fed cut went big back here, the Treasury yields surged. This was after a 50 basis point rate cut. It was basically immediately on that news, had a big
Interesting.
rise, and for whatever reason. So this is just one day. There's reasons to think the economy isn't growing that fast, but yeah, I mean, the bond market ultimately says, well, okay, and the 2-year yield also rose as well. So it wasn't just the long end. Yeah, it reversed higher. On the other hand, look, we're still basically at 5-month lows. It's hard, it's not like if the 10-year treasury yield surges past 4.2, past the 50-day line, past the 200-day line, then we're talking about something really significant. But mortgage rates are at 52-week 3-year lows, depending on what the measure. It's hard to get too worked up over today's move in the treasury yield.
Yeah, back to the Nasdaq Composite real quick, Ed. We did end up getting what looks like a very mild distribution day, only because it fell more than 0.2% in higher volume. But this was, again, a pretty bullish session with that close near highs. Let's also check in on the Innovator IBD 50 ETF FFTY. We've seen growth stocks performing very very well, and another strong day. Was down when the Nasdaq fell immediately following the Fed decision, but it reversed higher and outperformed nicely.
Yeah, hit record highs. Not everything was there, like just ARC, which is another sort of growth, speculative no growth, that fell a little bit, but it's basically at record highs too. So it depends on which stocks you got, because there were definitely some winners and losers today, but
Hmm.
growth stocks are doing very well.
Nice upside reversal for FFTY. Home builders had been rallying on lower interest rates, and then they came under a bit of selling pressure in recent days. This is a pretty wild move for XHB. This is a popular home builder ETF. It's a pretty nasty downside reversal. It looks like.
Yeah, pretty nasty. It was really rallying, and yeah, the yields fell initially and then turned higher. But again, it's not like yields are way up there. The this has been pulling back even when the yields were staying flat or going lower. I don't know. I mean, but this is sort of the area where it does tend to pull back and rebound. So maybe it will, maybe it won't. But not good action today. It's disappointing for people who bought recently.
Yeah, seeing a lot of whipsaw action, not only in ETFs but in several individual stocks as well. Maybe that's just a function of the uncertainty that's out there in the stock market. And then financials. A lot of people talking about money inflows into financials and seeing a lot of stocks working. We are going to talk shortly about American Express and the Dow, but XLF that ended up having a pretty good day.
Yeah, the relative strength line isn't the greatest in the last few months because the S&P has been rallying so strongly. But yeah, financials did well. I think you feel like better about the economy, even though interest rates are up a little bit. It just feels like if you feel, this is a sign of confidence in the economy here.
Yeah, absolutely. All right, well, let's move on and talk about a few stocks here. The first one is going to be Nvidia, NVDA. There was news on Nvidia this morning, and this is a stock that not that long ago looked pretty good when it gapped above its 50-day moving average. But then, selling pressure started to build, and then you had a higher volume decline today. That accumulation distribution rating of D plus is indicative of some institutional selling in the stock in recent weeks. What's going on with Nvidia here?
Yeah, there was a report, and it seemed like Nvidia CEO basically seemed to confirm it, that China is essentially told companies do not buy NVIDIA, the chips that are available to buy from NVIDIA, the lower powered one. Maybe they'd be interested in the higher powered, like the Blackwell chips or something similar to that.
Hmm.
So, I mean, there have been like strong indications, don't do this. But now it's like, no, don't do this. I mean, like it's a ban. And it also helps that Alibaba and maybe some others are developing their own chips that are good enough that makes it easier to do this ban as well. So that's a lot of revenue. China's a huge market. I mean,
Yeah,
for
yeah.
these things. And so that's not great. It's not undercutting the lows of this recent range, this flat base, but it's decisively below the 50-day line. So it needs to get above that before you start feeling a little better about this name.
Maybe that news on Nvidia also weighed on Broadcom today. AVGO. This is a maker of custom AI chips, and sort of a bad break for Broadcom here, testing its 10-day line down 3.8% in higher volume. But this is after a decisive move up into all-time highs. So that Nvidia news spread into several chip stocks today. Let's also take a look at American Express and the Dow Jones, AXP. This was a pretty clean breakout for this financial services giant.
Yeah, really nice looking, whether you want to use the reclaiming of this buy point or use sort of in here as a high handle, it broke out. The volume was higher. The highest looks like is the highest in several, couple of months. Yeah, pretty straightforward. I mean, this is a, definitely offered opportunities, to get onto this one. Uh, so the growth is solid, not amazing. You're not going to see amazing, huge rallies presumably off of this, but you can see a decent gain. And a lot of financials are doing well. And this one, if you think that interest rates are going to go up, like interest rates going to go down, maybe on the low end and up on the long end, it's a pretty good scenario for a lot of financials. Yeah. So
What's
uh,
the market cap on American Express? If we go to the weekly chart, the market cap on this
this
company
is
is quite
234.
234 billion. Yeah. So this is a company, even with a market cap of 234 billion, still delivering respectable, top line growth here and earnings growth as well. So really a strong performer in the Dow. And again, just showing that money continues to flow into financial
Y-
stocks in this
one more
market.
point, and I don't know how
Uh-huh.
much this is influencing things. That American Express, I think, still has a little bit of a bias towards affluent customers. They charge pretty high fees. I think that there's more affluent customers, and affluent consumers are doing a lot better because
Hmm.
stock market's up, home prices are up, they still have jobs. There's
Makes
not
sense.
inflation. Okay, eggs are like maybe steak a little more expensive, but they're not getting pinched at the grocery store. So that might be one reason why American Express in particular might do well in the payment space.
That does make a lot of sense. And let's talk about rare earths firm MP. Um, first of all, what is significant about rare earths? And I know some people may not know, but I know that rare earth materials are very key in the EV market. That's what MP Materials does.
EVs, cell phones, a lot of electronics. It's not like it's just hard to get them out. It's not they're not really that rare, but it's hard to get out, and it's just
Hmm.
these because of the ore grades. And China's had sort of a monopoly of that. And let me first say, I do have a position in MP, and this was our stock of the day as well.
Hmm.
But the stock surged here as the government took a stake and will invest and basically put a floor on the price. They'll pay, the U.S. government's going to pay well above the market price or whatever the current market price is, basically to support this industry so it's homegrown because China has such a dominance there and they can restrict, and they have restricted rare earth exports. So, this one just seems to be, favored by the government and in a critical industry.
And a very nice breakout here that you just alluded to, and really a nice, really when a stock tests the 50-day line, you want to see it hold support, and then you want to see it start to rally off support. So this is looking like a pretty good test. We could just give a perspective from the weekly chart as well. The 50-day moving average on the daily chart, and then that same red line is the 10-week moving average on the weekly. So you can see MP Materials still battling to get firmly above that 10-week line, but showing a lot of good price action in this market. All right, well, I think that will do it for today. Ed, you can stop the share. I appreciate it, and thanks as always for your input. Really appreciate it.
Thank you, Ken.
All right. Yeah, that'll do it for today. Let's see. For tomorrow, stock market today's schedule's been a little in flux, but it's going to be Ed and Alexis Garcia tomorrow. It'll also be Rachel Fox hosting IBD Live tomorrow morning at investors.com. If you haven't checked out our live market show each day, just go to investors.com, IBD Live. Again, Rachel will be hosting tomorrow. She'll be joined by our chief content officer, Chris Gessel, Arnie Gutierrez, and our market surge team. And should be a great show. So that'll do it for today, folks. Thanks a lot for joining us. Always important to watch the day two reaction of the stock market to the Fed. So could see some volatility tomorrow. Maybe not. We'll have to see. But we'll see you back here tomorrow afternoon. Take care.